Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is the Forex Quick Look. I'm going to take a look at the New Zealand versus US dollar. Way back in the Asian session, the Reserve Bank of New Zealand actually kept rates unchanged. The market initially moved to the downside off of that, the news, and then rotated back to the upside, making a new high for the day. And in the process, the price moved above this swing area right through here, where we had a number of different swing highs over the last week or so of trading. So the break to the upside should have sent the price higher, but what happened was the price then rotated back to the downside, and that move to the downside took the price all the way down to this cluster of moving averages. We had the 100-hour moving average, we had the 100-day moving average, we had the 200-day moving average, this green line, we had this green line, which is a 200-hour moving average, and you can see the price moved up briefly below the 100-day moving average, 100-hour moving average, 200-day moving average, but could not make it to its 200-hour moving average, the final stop. And if it would break below that level, it would open the door for the downside momentum, or at least a more negative bias from a technical level. And then what we get? We got the CPI data coming out of the US, and it was a fast break the other way to the upside, breaking above the swing area right through here and opening the door for further upside momentum. And as you can see, that has continued all the way into the last hourly bar, where we're basically bouncing against highs for the day before rotating a little bit more to the downside. Let's take a look at the 4-hour chart, because this yellow area is of significance, and you can see it better on the 4-hour chart. And so if I go to that 4-hour chart and sort of zoom out here and take a broader look at this this area right through here, actually I'm going to go even further. I'm going to go like that. And if we look at that yellow area up through here, it all started way back here in this period right here, where we had swing highs, so it would lead to the move to the downside. Then we came back up to that level and rotated to the downside. Then we broke above that level here, and found support against the level, and then broke below the level here. And on this bounce to the upside, we sniffed it, but could not sustain momentum, and the price ultimately rotated to the downside. So here we are back near this old high right here, the last high that sniffed that line, and the price moved a little bit above it, as you can see here at the 0.63035. Above that is that swing area at 0.6313 up to 0.6315. So really from 03 to 15 is where we're going to look for resistance. Is it 15 or 18? Somewhere right like there is we're going to look for resistance on the top side, and that's where we're finding resistance on the top side. Are the sellers able to keep a lid on it against this area? So it becomes a risk-defining level for traders. Traders can lean against it when they stop on a move above. But and those traders who think that the price is going to continue to move to the upside, what you want to do is get above that level as well. These levels become both barometers for both buyers and sellers. So between the 03 to 15 or 16 or so level is where the price is going to where the rubber meets the road, and whether either we're going to go more to the upside or we're going to rotate back to the downside. So if we're able to get above this yellow area, then we're going to be looking toward the extremes. The extremes came in between 0.6376 and 0.6383, and get above there. It opens up the door for further upside momentum. On the downside, what would really hurt this pair? Well, I mean, you can say that you have to go all the way back down to the 0.6246 level. I'm going to put a Fibonacci retracement on this move to the upside from this low right here to this high right here, and see what that takes us. And if you look at that the 38.2 comes around the 0.6252 area, which is just above this level right here. I would say that if we get a correction move to the downside and we rotate back down toward this 5.2 level, that we want to see support buyers come in and push the price higher. If the bias is more to the upside now that we're seeing the break higher in trading here today. So there you have it, a pretty detailed look at the New Zealand versus US dollars. We head into the new trading day. A lot of the currency pairs had big moves today, so the videos were a little bit longer, but I think they're important for you to get your arms around where we are, what the story is for each of these major currency pairs. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.